This was my Robinhood $100 call expiring January 21, 28. I closed it on April 17, 2026 for a 50% gain and locked in $1,041 in realized profit. But this video is not just me waving a screenshot around like I found the infinity stones. Because screenshots by themselves do not teach anything. The real question is, why did I take the trade? This is Big Balla Walla's rationale. Rules in, rules out, receipt printed. This right here is the real receipt. No fairy tales, no fake guru Photoshop, no, trust me bro, analytics. I opened the position for $2,074 and closed it for $3,115. That gave me a realized profit of $1,041, or plus 50. But the money is not the whole story. The real story is the rule behind the money. Because getting paid is cool, but giving back a clean winner because you got greedy is how the market Swiss cheese you. This was not luck. This was not me waking up, rubbing my hands together, and YOLO clicking like I had a crystal ball. It was not me saying, I feel like Robinhood is going to run, and then praying the market had mercy. That is not a process. That is gambling with better vocabulary. The trade came from a repeatable process. Analyze the setup, execute the trade, then manage the trade. The win was not just the money. The win was following the rules. Somebody asked, what was your rationale? That is actually a great question. Because if your whole rationale is, I thought it would go up, brother, that is not analysis. That is a wish with a Robinhood account. My rationale was not, $hood is green, let me chase. It was not, everybody online likes it. The rationale was based on structure, support, resistance, price strength, risk, and whether the trade fit my LEAP framework. I'm not giving up the full sauce, but I can show the broad idea. Just because I like a stock does not mean I buy it anywhere. That was the whole point of part 1. A good stock can still become a bad trade if the entry is trash. With Robinhood, I already liked the bigger picture, but liking the stock is only step 1. The real question was, did the chart give me a clean enough reason to risk capital? Because I am not trying to buy every stock I like. That is how your account starts looking like a yard sale. This is where the real chart comes in. When I looked at Robinhood, I was not just staring at one green candle like it owed me money. I was looking at the bigger structure. Where did price bounce? Where was support? Where was resistance? Was price showing strength? Was the move clean enough to justify a leap? On the chart, $hood was around $74. That was real movement with structure behind it. Chart first, feelings last. That is the part most people skip. They want the outcome, but they do not want to slow down and read the chart. The chart is where the trade starts making sense. Support matters because support shows where buyers showed up before. It does not guarantee anything, because nothing in the market is guaranteed. But it gives you a clue. If price pulls into an important area and buyers step in, that gets my attention. If price starts building strength after that, now I am watching closer. That is different from chasing a stock in the middle of nowhere. Buying without a level is like jumping out of a plane and checking for a parachute on the way down. Another thing I was watching was the reclaim. A reclaim matters because it shows price is trying to take back a level that used to matter. When a stock breaks back above an important area and holds, that can be a sign of strength. Again, that alone is not the whole trade. It is one piece of the puzzle. Support, reclaim, trend, momentum, risk, and reward all matter. That is the difference between a real setup and a random click. Before I enter a trade, I want to know the next key levels. If you do not know where the stock might run into resistance, you do not really have a plan. You are just hoping it keeps going, and hope is not a system. I want to know where price could stall, where sellers could show up, and where the move could start looking extended. Every trade needs a reason to enter, but it also needs a reason to manage. The entry gets you in. The plan gets you out. So why did I use a leap? Because leaps give me time. This was a Robinhood $100 call expiring January 21, 28, so I was not dealing with some short-dated contract that expires before the market finishes clowning around. With short-term options, you are fighting the clock every single day, and that clock sits there like a bill collector. But do not get it twisted. Leaps are not magic. A bad leap entry can still cook you. Even on a winning trade, risk still matters. A lot of people only talk about risk after the trade goes bad. That is backwards. That is like buying a fire extinguisher after the kitchen already burned down. Before entering, I need to know what would make the setup weaker. What level matters? What would make me question the trade? Because if you enter without knowing what invalidates the trade, you are not trading. You are hoping, and hope will pack your account up by Friday. This is where the discipline really kicked in. The trade hit plus 50%. That is my rule area. And this is the hard part, because once you are up 50%, your brain starts acting brand new. It starts saying, maybe this can go 100%. Maybe I should hold. Maybe this is the one. That is FOMO Fred trying to sneak back in through the side door wearing a fake mustache. But the rule was already there. Hit 50%. Take the win. Print the receipt. Because if I keep moving the goalpost every time I win, then I am not following a system. I am just letting greed edit the rules in real time. I only had one contract, and one contract changes the decision. If I had multiple contracts, I could trim one, hold one, and let another run. But with one contract, I cannot trim half. I cannot sell 1/3. I cannot keep a runner. It is one contract, one decision. Either I follow the plan and take the 50%, or I get greedy and risk giving the trade back. Could Robinhood keep running? Yes. Could it pull back and make me regret not selling? Also yes. Holding for 100% sounds good. Everybody wants the bigger win. But if my rule says take profit at 50%, and I ignore it every time I get excited, then it is not really a rule. It is just a suggestion. And suggestions do not protect your account. Rules do. This is where traders mess up. They make the plan when they are calm, then break the plan when money is on the screen. I would rather take a clean win than turn a receipt into regret. Here's what went right. I had a reason for the trade. I was not randomly chasing. The chart had structure. The trade moved in my favor. The profit target hit, and I actually followed the exit rule. That sounds simple, but most people struggle with that last part. Following the entry is easy when you are excited. Following the exit is hard when you are winning, because your brain starts calculating imaginary profits. And imaginary profits are dangerous. Now I am not going to act like this means I am perfect. One winning trade does not mean I cracked the market. That is how traders get humbled. You win one trade and start walking around like you are the Federal Reserve. Relax. The next setup could fail. The next leap could pull back. The next stock could look clean and still not work. That is why the goal is not confidence without rules. The goal is confidence because of rules. I posted the receipt because receipts build trust. If I am going to talk about rules, I need to show when I actually follow them. Not just when it sounds good. A lot of people talk strategy, but never show execution. This was execution. The setup gave me a reason. The target got hit. The rule said take profit. The receipt got printed. That is the brand. Not fake guru energy. Not, I call every move. Just building a system and letting the receipts speak. So to answer the question directly, my rationale was simple. I liked the stock. The chart had structure. Price was showing strength near levels I cared about. The setup fit my leap framework. I had a clear profit target. And when the trade hit plus 50%, I followed the plan and locked in $1,041. That is it. No magic, no guessing, no fake profit energy, just rules, structure, and execution. And that is what I want Big Balla Walla to represent. Not random calls, not hype, not pretending every trade is perfect. Just a real system being built one trade at a time. This was the real Robinhood trade. Robinhood $100 call January 21, 28. Opened for $2,074. Closed for $3,115. Realized profit, $1,041. Return, plus 50%. Could it keep running? Maybe, but the goal is not to catch every dollar. The goal is to stop making emotional decisions. A good trade is not just about making money. It is about following the plan. Rules in, receipt out. Protect the account, not the ego. The market will always give you another opportunity, but it will not always give you your discipline back after you ignore it. This is Big Balla Walla, not financial advice. Always do your own research.